The only reason why you still keep losing in Forex trading, despite knowing all about technical analysis, fundamentals, and so on, is because you have a terrible trading psychology, and like I mentioned in our first trading psychology video, it doesn't matter if you understand how the market works. What will make you a better trader is simply your trading psychology, and I will give you 20 tips to follow to help improve your trading psychology and help you win more in Forex trading. Number 1. Always use stop losses no matter what. This is because the moment you place a trade and you do not use a stop loss, you are risking your whole capital, which is why accounts are blown in the first place. The market is not 100% predictable, and anything can just happen, which may cause the market to reverse on you. If you do not have a stop loss set to stop your losses, then you might lose your whole capital. Everybody must lose in Forex. You cannot avoid it. Not even banks and hedge funds can avoid it. The best thing you can do to help yourself is to use a stop loss. 2. Always have a higher reward than his risk. This will help you recover from losses better. In case you are wondering why you keep trading, but you are not growing or your capital keeps reducing despite the fact that your analysis is good, it is because you keep trading expecting a low reward with a high risk. Stop that today. 3. Never regret anything, that is, never regret missing an opportunity or losing a trade. This will help you realize that there are unlimited opportunities in the market, and there is no point being scared of missing anyone. Also note that you will face uncountable losses, but as long as you keep following these rules, you will always come out profitable. Always. 4. Never trade without a plan. And this is because trading without a plan is equivalent to trading blindly. I mean, what do you think will happen to someone who wakes up in the morning and decides to build a skyscraper without creating a building plan? The building will collapse. In everything you do in this life, you need a plan, and you need to test the plan before using it. You can test your plan with demo trading, and if it works, use it and stick to it. 5. Never trade without practicing trade management. If you do not practice trade management, you will be leaving a lot of money on the table almost all the time. There was a time that I placed a trade and targeted 100 pips, and the trade got to 98 pips, and it began to reverse. It eventually reversed and went back to my entry. The best part of it was that I had already taken out some profits before it happened, so I didn't leave any money on the table. Assuming I didn't practice trade management, I would have wasted that trade. So please always take profits before leaving the trade to keep running. 6. Never go against your trading plan. Going against your plan might go in your favor sometimes and you will win big, but other times it could go against you. This is why it is always advisable to play it safe. All that your trading career needs from you is discipline, and by sticking to this plan, you are already practicing discipline. Imagine creating a building plan for a house, and you go against the building plan and begin to build a skyscraper. What do you think will happen later? Everything will crash, and the same thing applies to Forex trading. 7. Never trade without confirming entries. I guess this explains itself. 8. Never trade under pressure or fear. Trading under pressure could be that you are trading so that you can make money to impress someone, or you are trading on borrowed money, or trading with money you cannot afford to lose, or trading so that you can pay your bills, or trading because you want to get out from a situation, or trading so that you can make it fast. If you find yourself trading under pressure, just remove your money from your trading account because you are not ready. I am saying this because trading under pressure causes fear. There are 4 fears of a trader who trades under pressure. There is FOMO, FOL, FOLPTIL, and FONBR. FOMO means fear of missing out, FOL means fear of losing, FOLPTIL means fear of letting profits turn into loss, FONBR means fear of not being right. If you don't trade under pressure and you follow the rules of trading psychology, then you will be able to eliminate all of these fears. 9. Never look at someone's Forex journey and try to copy. This is one of the reasons why we reduced the rate at which we send out our results to the group. One trader sent me a DM to ask me how much do I make in a day, and I told him it's not his business because when it comes to making money in Forex, we cannot all make the same thing, especially if we trade using different lot sizes, targets, capitals, trade management strategies, brokers, and so on. The worst part of it all is that Forex traders on social media don't show you their losses and they show you their wins, especially wins that show that they made money without practicing risk management. This has become a problem. People will see these things and will get misled into the idea that they can make it the way one trader is making it, but they forget that the trader also loses too. These are things to put into consideration, and I am pretty sure the reason why you were also motivated to try Forex trading is because of what you saw online. My advice for you is to only use these traders as a motivation to not give up. The best thing to do is to focus on your own journey, move at your own pace, and stay true to your own self. 10. Always seek knowledge. There are a lot of things I have not discovered about Forex trading. There will always be things that we do not know about the markets. The best thing to do is to keep looking for knowledge, watch videos on Forex tricks like this one, and expand your wisdom. Pay for people's mentorships and learn their ways. I got to know a lot of things about trading by talking to other Forex traders, so you too should try doing the same. 11. Never trade without sentiment. This is just trying to tell us that we should always apply sentimental analysis to our trading. That means think the way others will think before placing a trade. If you think others will buy at a level, you can as well consider a buy. 12. Never be unrealistic. Going from $100 to $1 billion in 2 days is possible, but this is unrealistic. What I mean by realistic is trying to make $5 from your $100 capital, because that is more likely going to happen than turning $100 to $1 billion in 2 days. Therefore, in whatever you do, make sure that you are considering what is most likely to happen. 13. Never try to risk what you cannot lose. I have seen traders who lost their whole life savings in Forex. I have seen traders who have lost money that was supposed to be used for something else. The worst part of it is that they trade this money without risk management. Trading without risk management and putting yourself under pressure and fear is the worst thing you can do to yourself. You cannot start your Forex trading career with money you cannot afford to lose. You will always end up losing it because of bad trading psychology. 14. Always be prepared to lose and accept losses. I guess this explains itself. If you are not prepared to lose and accept the loss, then remove that money and continue with the demo. 15. Never try trading if you haven't practiced and perfected everything in trading. If you have not practiced your strategy and perfected it, please don't fund your live account. Before you start trading, you must have created a strategy that fits you. Don't use someone else's strategy because it might not fit you. The person's strategy might be good for only scalping and not good for day trading, or it could be good for a free person and not good for a busy person. So you are supposed to discover the strategy that works for you, test it, and stick to it. 16. Always go back to your Forex course every month. After taking a Forex course and you start trading demo, make sure you retake the whole Forex course from the beginning till the end every month. This seems like an unimportant step, but trust me when I tell you that it is extremely important. Doing this will go a long way in helping your mindset. It will help you stay motivated, improve your wisdom, and help you in understanding the Forex market better. 17. Never to get excited. Maintain a neutral feeling. The moment you begin to introduce emotions into your trading is the moment you need to take out your money and go back to trading demo. People will often tell you that making money in a demo is easy, and this is because you are not trading under any pressure and you cannot attach emotions to the demo account because you are not actually losing real money. If you can treat your real account like your demo, this should solve your problem. The reason why you will perform better on a demo account and not a real account is because you are attaching emotions to your real account and not your demo account. So the best thing to do is never get excited after you win and never be sad when you lose. Don't focus on the money in your account. Focus on making profits every day rather than making a specific amount. Just practice good risk management, trade management, and follow the rules of a good analysis and your account will grow. You are supposed to be like a robot when trading. Just trade following the rules and remove any emotional attachment. Trade with your head and not your heart. 18. Never doubt your analysis. When you analyze a currency pair and you have chosen your entry point, go for it. Set your take profits and your stop loss and have faith. Never think about closing the trade unless it is in profit. If it is in loss, leave it alone and let it hit the stop loss. Place your trade and leave it alone. Stay away from watching the charts. Only start watching the charts after it has hit the first TP. Reason why you should not watch every move the price makes is because your emotions will be triggered at every move the market makes. It's better to just take few glances when monitoring your trade and come back again than watching it like you are watching a football match or something. Stay courageous. 19. Have a long-term plan and focus on it. Do you know that you can grow a $1,000 account into a $20,000 in 1 year with proper risk management? Isn't this better than buying one crypto coin that you cannot really tell if it will rise in the next 1 year? To do this, you might need to trade every day for the whole year. I am saying this because I have traded almost every day for a whole year, and if you check our history, you will see that it's possible to pull it off. People will tell you to trade and withdraw your capital. They will tell you to set a profit target. I am telling you today not to have a profit target, because having a profit target is one thing that can mess with your mindset. My advice is for you to trade as much as you can and keep trading. Overtrading is not bad, as long as you take the opportunities following the rules, and as long as you don't force an opportunity, then you will grow. If you can make 10% every month, you can make an exponential growth in your account in a year. So keep trading and follow the rules. Setting a profit plan will only make you put pressure on yourself if things do not go in your favor. Instead, aim to make profits every day, no matter how small. Even if it is $10 you make in a day, be happy with it. 20. Which is the last tip, always review why you lost a trade. My mentor told me back then to have a trading journal. In his own journal, he will write how he analyzed a trade and took his trade. If he wins the trade, he will write down his analysis in his win book. If he loses a trade, he will write the reason he lost in another book. He called it his "Don't Do This" book. It helped him over the years to perfect his trading strategy, and now he is living the life. He told me to always learn from a loss and never go back to making the same mistake I made again. If you understand why you lost a trade and you refuse to learn from it, if you lose another time doing the same thing, then it is not a mistake, it is a decision. You see these 20 rules of trading psychology. I want you to print it and paste it on your walls, if possible. Frame it on your walls so that you can constantly remind yourself of what you are supposed to be doing in the market. Following these rules will help you understand the nature of trading, and once you unlock that level of a perfect trading mentality, then you will love Forex trading.